Welcome to Trading Lounge and the Australian Report. And I'm showing this chart here, which is the daily chart for South 32. So it's a spin-off from BHP. And the reason for showing this chart is because it has been really helpful in understanding that resources, iron ore, copper, would be bullish because the first leg that we had down through here was actually a corrective wave as an A wave, a B wave, and then a C wave here in 5 waves of 1 and 2 and 3 and 4 and 5 here. Then I thought we might have the run up through here, so we did trade up through here, but then quickly realized on the drop that this was just a B wave here in terms of an A and a B and a C. So then we just basically waited for 1, 2, 3, 4 and 5 for the C wave to finish and then get back into this and trade it up. And our target area has been up at 320, 330 sort of area up here. We're looking for 5 waves in this little area through here. It is a little bit tricky to read, but I was assuming we've got one here, an A wave here, a B wave here, and a C wave here for 2. Then moving up into the 3rd wave here, 4th wave, and a 5th wave moving up here. So I know we still got further to go here. I know that what I'm trying to say is that I know that the commodities are edging higher, and perhaps they've been helping hold the ASX up. This is the daily ASX here, in this range here because the banking sector, we normally look at CBA, but because they've been a bit naughty, they've been sent to the naughty corner, they've been hammered. So I can't really use CBA as a steady, stable sort of indicator for the ASX, but I can use the others. So I would prefer to use WBC, Westpac, over ANZ because ANZ has got a lot of interest in Asia, so to speak. So let's just look at BHP for WBC here for a moment. So when I look at this here, I know that the first leg from this, when we came all the way up through here, and we got that top in play because we were looking for a little 5 wave structure in here. So we really nailed that well, and that was quite easy. The move down, I was expecting basically an A and a B and a C down. The A wave was very easy in 5 waves, so I knew that we would end up having another structure down. This structure in here is rather complicated. I've just got it as a triangle for a B wave here at the moment with an A here, A, B, C for the B wave, the C wave in 3, the D wave and the E wave, and then down for 5. Now that could be wrong, but whichever way I look at it, this move down here is corrective. So that means that when this whole pattern here finishes, then we should see new highs above here. So the question is, it finished? So we could look at this as like the A wave down to here, even though I understand that. I don't understand that much. I have to go into the guessing game here a little bit. But still, wave A here. And then it's quite clear in my mind that most of the moves up here in the banking sector have got an A wave, a B wave, and then 1, 2, 3, 4, 5 for the C wave here to make the bigger B wave here. It is possible that we could be in a bigger bear market, and we can use that as wave 2 here and down for 1 here and back for 2. I don't think it's the case, but I like to leave it there until we can rule it off. This move down through here, we can count in 5 waves here. So it's possible that we could have an A wave here, a B wave here, and then the C wave sitting right here. And then that's the finish of that particular correction of wave 4 here. And then we're going to be moving up through here. It's also possible that, excuse me a second, that this is still down here as wave 4 here. This is where we've got to be careful. So the 5 waves down here is wave 1, and we know that wave 2 pulls back 61.8%. So it's done that now. It's up at the 33 area here. So that means that we can be down for 1, an A and a B, and 1, 2, 3, 4, 5 for the C wave. So we could have that top in place there and then we could be coming down for the third wave. So it's really at this box here that we need to decide if we're going to be bullish or bearish, but we don't need to decide that. We just need to be patient and allow the market to reveal to us what it is. Now, the good news here is that with the trading levels, we've got the major level here, 30, then we've got the minor levels, minor level 1, 2 and 3 here. And we know that when we get a nice tested support on top of number 3 here as support, then it separates the market being pulled by this closest largest number, and then it gets support on the number 3 here, then it's free to go. We know that we get to the next level, but in this case, if we got up to this level, we would end up continuing going up there because the structures move so high at that particular point. So we would need to look at this as a bullish run from here. So I would turn bullish in this if the 33 became the support. Okay, so otherwise it's got the chance in this space here, and I know we've been in this space for a little while and it gets a bit boring listening to me, but bottom line is that support here, we go up. If not, then we go down. Now also what I normally find too is that within group 1 here, this is all minor group 1, 1, 2 and 3 here. If the number 2 here becomes the retested resistance here, the 32, then it's most likely that the trend is over at that point and we'll be moving back down from that point. So we don't have it as a retested resistance yet. We nearly did here because it came down, went back and retested it, and then got to here. So that would have been the short trade under here. That means that it would have been locked here and done and dusted and moved down. But still, we needed that extra wave to the upside here. So it could be 1 and 2 and 3 and 4 and 5, and we may get a little spike up here. But that little spike, if it pokes its nose up over the top there, then it doesn't mean that it's bullish at that point, you know, because it can still come down from that point. You know, and it's got to kind of sit there. And once we've got the first high above the level, then that would be our trigger there. So we'd need to see that in the banking sector for the ASX 200 to go up. So we know that the resources have got a good few weeks to the upside, okay? And maybe when they top out, this can top out as well or something. But yeah, I don't know if this is wave 1 here or this is wave C sitting here as well in this, you know, in this area here. I'm not sure, and that's what we need to figure out. So we know generally what to do in this area here. So it opens up to being bearish and bullish. So it really means that for the ASX 200 here on this daily chart, we need to look at this in 2 ways as well. My primary count would be having the 5 waves down here for wave A, and then wave B way over here on this high here, and then looking for 5 waves down here. So the banking sector may take us down into that space, the ANZ and the WBC. We can't really rely on CBA at the moment. So looking at this as possible 1, 2, 3, 4, 5 down into this space here. Otherwise, we need to consider, it's a little bit complex, but we consider this wave 4 already in place where this wave B is here. And this works out as, if I just go to the 4-hour chart here as a bullish count. So the 5 waves down for the A wave here, then the B wave coming back up 61.8%, which it did, and then an ending diagonal triangle, which is a little bit sort of complicated, but each leg down in the triangle pattern is in 3 waves here. So it does fit okay, not too bad, as a wave 1, wave 2, wave 3, ABC for wave 4, and down for wave 5 here. So it is possible for this, and in this case here, it would be wave 1 here, A and B and C for wave 2 here. A bit too complex really for wave 2. And this leg up here, it can be counted in 3 waves or 5 waves. I prefer it in 3 waves, but we'll see how we go with it. And also, that we're looking for a move down through here, and the first thing we were looking for was a 61.8% move of this previous swing here down, and that's in play now. So this move down through here can be counted also as 5 waves and 3 waves as well. It's just not very clear. So we need to sort of keep, I mean, this has been pretty tough work moving through here all the time and trying to get a situation to the downside. And the situation to the downside in a nutshell is that with the levels here, 5.8 is important, and then we'd go down to 5.5. Halfway between those two is always extremely important, is this number here. So we are working with this number here for the support through here, and this number here I normally find more important than 600 and 700, but 600 and 700, they will play their part as well. They're good whole numbers, just not as strong as 5 and 8. And not as strong as this one here either. So this one is the support, the 5650 and the 58 here. Then we've got this these two in here, which I find interesting. So the 57 here, what we've been looking for here, we've been looking for the 57 as a resistance, and you know, with resistance, you know, what is support and resistance? So in a very simple way, if we're looking for resistance, we want the market to come through the level and then give us that low in here, and then we just simply draw a line under here, and if that fails there, move through, then we got our short position as a failed retest at that time. But most of these here haven't really given us those triggers each time. They've just gone back up there, you know, so they've been a bit difficult in that sense. So not difficult, they'll keep us safe. But it's also the 5.7 can be a little bit helpful too. The 5.750, the midpoint halfway between 700 and 800, the halfway mark there, that as support you could see and could also use as well here. So we would also need the first high above the level here, and then coming back on that, and then taking the move up through that way, so to speak. So that's the short side, that's the long side. So I think it's important to you know, to try and weigh everything up as such. So on the bullish side, we'd be looking for 5.7 to be long, and then this one here to be short. Now we'll go in here and have a little bit more detail, but I need to put the message here that in this count here that we've got wave 1, ABC for wave 2, and then if we look at this as wave 1 and this low as wave 2 here, that means that wave 2 is in place here, and any move up through here would be the bullish one to catch, because yeah, it can't come, if for this count to be in place, it can't really come any lower than what it is at this point here. Okay, so we'll look at the long side in a moment when we go into the tick chart and so on. I want to go to another intraday chart here to look at the bearish side of things. So this is where I've always felt that we're on the right track, being bearish, but as you can see, the wave A here and all of this going through here, it's really quite you know, a complicated pattern. So this is the highest point for quite some time through here. So what that does, it means that I must move wave B to here, so an A wave here, and then all of this pattern across here is this. Really, this is all the same pattern, isn't it? Do you know what I mean? They're all, each leg is associated with each other in some way. So what we're looking for is in this case a move down from here, and of course, as I mentioned, we can use the 5.7 as a retested resistance or breaking of that this time, and then we'll move down lower into the 5.5 area here, and we'll be looking for 5 waves down. So yeah, let's just go into the tick chart. We really need to sort of get a bit more refinement on this little area here about being long or short in this case. So I'll just go into the tick chart here, and on the tick chart here, it's also a little bit tricky too, but I can count this down here as a bit tricky, but 1, 2, 3, 4, 5 for wave 1 here, back for wave 2, and then down for 1, back for 2, down for 3, back for 4, and down for 5 for the third wave, the fourth wave, and then get 5 waves out of here. So I can count this as wave 1 here. Okay, so if we did that and we looked at the 50-60% retracement level from this area to this low here, that brings us into this little box over here. So we could say that, you know, I know that we were looking at 5750 here to be, you know, if we got a nice tested support on that. Currently it's resistance, but this is really where the market's trading, isn't it? It's all about that number there. So if this number here becomes the support, the 5750, you can go long, but I would just put I'd put not your full bet size on. I'd only put a smaller bet size on if you got support on the 50, because the 50 can get you to group 2, but the group 2 area here, the 5772, could get you into trouble. And this is, if it's going to fail, that's where it's going to fail, at the 72 and the 80 in here. Okay, if they became the support, then you can add to the position and move up from that point. Okay, so step 1 is that on the long side, if the 50 gets support, get a small position. There will be a struggle through here. It will be tough as, but if support is found on the 72 and the 80, then you can build the position on those and you'll be to the long side. This little C wave up here, if I looked at this as wave 1, an A and a B and a C for wave 2, and then 1, 2, 3, 4, 5 here, that would be the third wave, that would be the fourth wave, and that will be the fifth wave. So that could be just done and dusted from there. Okay, so we can move down from that point. Yeah, so I guess that what would make this a bit bearish is this is group 1 here, and at the moment the market's above group 1, it's got support. So if I was looking for a long trade in here, then my long trade would have been above that little point, but above that high here. On the bearish side, if the number 2 here, the 5720, if that becomes the retested resistance, then you know that you're going to be going down from that point. Okay, and it's also possible to count this down here in 3 waves as well, especially when I look at the cash market. And when I look at the cash market, I can see this as, if I could just borrow this here, yeah, it is possible to see this as the A, B, and the C to here, which will give it the bullish count. But also too, if it's wave 3 here, wave C here, it means it can also be wave 3. So this could be an A and a B and C for wave 4 here. So we've still got a way to go to call on the bullish side. So even if the market came down here on the bearish side, it would come down into this space here somewhere. From this point here, it could also come back up 61.8% as well. So it'd be a bit lower. But because we've had 5 waves down to this point, we would be in bearish mode at that point anyway. Would be in the trend would confirm itself at that point of being bearish, because what it would do is it would remove that bullish count that I had before. So the bullish count really needs to stay above this low here and continue to move up. So that's what we need to look for. We've gone through this story a little before as well, but we need to keep going it, because you know, out of this, because markets are trends and corrections of different degrees, and we're currently in a correction here in this space here. So when we come out of it, we're going to be going into a really nice trend. Now, is it going to be up or is it going to be down? In this particular case, I'm not quite sure. So we need a plan for both sides of the market, and that's what we've been working through today. It's what we've been working through before. I know it's laborious, but the market is the boss. It calls the shots, and we must do what we're told and follow it. And that's how I see it. But yeah, don't fall asleep at the wheel, because there will be a good trend that comes out of this. It's just that I can't see from the banking sector, where it's going to take us. I've got a bearish sort of mode in there, but I don't want to get locked into that and put that across as our main thing. So let's just keep working this pattern, and yeah, so we know there's support from the material side, so stay long in the material side. You can start to lighten up a little bit in that over the week ahead as well. But let's see where the banking sector ends up as well. Alrighty, cheers.